Today, we're going to cover some really basic stuff that you should probably know as a broker out there fighting for Main Street. We're going to go through some simple terms and give you basic ideas so that you understand the acronyms, the language, what people use when they're talking about small group benefits, whether it be level funding or through the fully insured market and the ACA. Number one, what is the ACA? Now, most people have heard that term, and most people still think that it's different than Obamacare or the Affordable Care Act. I'll tell you a quick story. The Affordable Care Act is what Democrats call it. Republicans call it Obamacare. It is the exact same program. What's interesting is people have different approval ratings of it depending on how you name it. The Affordable Care Act was a law passed during the Obama administration that sought to change the way in which insurance finance is regulated in the United States. It has increased regulation. It has, at least in part, decreased the ability for fully insured players to actually price reality. It is a deviation from a market-based approach and an expansion towards a federal collective, if you will. Number two, you're going to hear about minimum essential benefits. Essential health benefits or minimum essential benefits are about 10 benefits that every plan has to cover in order for it to be a qualified ACA plan. It does not make it a good plan if it covers those 10 things. Again, the devil is in the details. But in general, the essential benefits are extremely limited, and that it enables someone to offer a thing called an MEC or a MAC. That is minimum essential coverage. In my opinion, this is not coverage for the member as much as it is compliance for the business owner in offering their benefits to their employees. There is a form that has not been enforced as of yet, but is still required to be filed called a 1095. The 1095B allows the employer to say, I have offered coverage, even if it is a MEC or minimum essential coverage, because it has the minimum benefits inside the plan. You'll hear other terms that are thrown around the ACA: bronze, silver, platinum, gold. These are levels of canned plans that fully insured carriers offer. And at the origination of the ACA, they were going to tax them differently or tax benefits based on the tier of plan. Now, that has not been implemented to my knowledge. And in that point, you still have the legacy of the names of the plans, or the metallics, if you will, and the corresponding benefits. Sometimes business owners will ask for I want a gold level plan, or I want a copper or bronze level plan, saying I want a good, bad, indifferent level of benefits for my plan. So whenever you hear those terms, realize the more precious the metal, the more expensive the plan is going to be because of the expansion of its benefits. Again, we talked about the 1095, and there's also another part of the ACA that said the employer must pay at least 50% of the employee cost for that. That is the shared responsibility side of the ACA. Now, with that, employers can cover more and have no problem. There's still some questions about under 50 FTEs, and that is another term that we're going to talk about today, which is full-time equivalents. There's a calculation that the ACA said that you have to have a full-time equivalent, then they base that off of three different numbers, either weekly, monthly, or annual averages. And to my mind, there's not been guidance on which one should actually be used for FTE equivalency. So people use 1, 2, or 3, or a blended average to try to get to an answer, because there has not been clarity provided to my knowledge. The next term we're going to cover is guaranteed issue. Inside of the fully insured ACA model, it's guaranteed issue. You come down, we'll give you a rate, and that rate is based on the community rating, and you can say yes or no. Well, in the level funding world, it is not guaranteed issue. It is priced based on the risk of the group. If the risk is too high, people say no. Number 7, community rating. Community rating says that you have to rate everybody the same no matter what their occupation is. Well, inside of the real world, or inside of level funded plans, you rate things based on the risk of that industry. So an accountant for accountants is a safer bet, so to speak, than an underground miner in an unstable mine. Inside of the marketplace, you'll also see something that is called the government subsidy. Now, the government subsidy is probably going to change, but currently is based on a multiple of federal poverty level. So if someone is enrolling in the marketplace and they have let's say they're earning federal poverty level, they get those plans for a very, very cheap cost to them. Now, it is a transfer mechanism to where it transfers to the broader American population, and they don't cover the cost. Therefore, they don't, in my opinion, don't value it as much because they're not paying for it. And the cost is subsidized through taxation, through obfuscation, and through the community mechanism, which is part of the reason why you get such a different utilization level inside of that space. What is wellness? Wellness is a type of, or a number of things that are covered that say you can do an annual physical, you can do some blood work. These are designed, and this is one of the good things, in my opinion, in the ACA, to catch things early in the cycle. So instead of you catching it when you've got stage 4 cancer, you catch it at stage 2, right? It's designed to catch things earlier in the cycle to drive down overall cost for the American medical system as a whole. The last thing that we're going to cover is, what is a plan year? In general, a plan year is 12 months. So when people come on, when they're on an employer-sponsored plan, every 12 months that will renew, and that is an open enrollment period for the new plan for members who are eligible for that. Again, plan years are 12 months. Deductibles are based almost exclusively now on the calendar of the year, not necessarily on the calendar of the plan year. So if you have something that starts June 1, your accumulators will go until December 31st and then start over January 1st. Those are some basic terms that you probably need to know out there in the marketplace. I know I got kind of weedy, but if you want to get deeper information, keep exploring. We'll see you in a bit.